In this video, I'm going to show you how to calculate income taxes. This isn't something you'll have to do very often. However, you'll need to be familiar with the process if you're preparing for an industry exam, securities, mutual funds, or a financial planning designation. And it's good to understand how income tax is calculated for when you're working with your clients. Calculating income taxes means calculating your net tax payable. And to do that, there are 4 steps. First, determine the total income by adding up all sources of income, employment, business, and investments. Next, subtract allowable deductions such as pension contributions, RRSP contributions, and childcare expenses. This will give you your taxable income. Then, calculate the basic tax payable. And finally, subtract all tax credits, which will give you your net tax payable. Now, in Canada, you're required to pay federal income tax and provincial income tax, or territorial income tax. So you'll have to complete this process twice in order to determine someone's net tax payable. Most industry exams will only require you to complete this process for the federal tax rate, but in this video, I'm going to do both since it will show you the complete income tax process and it will show us how the average and marginal tax rates are determined. We're going to do an example using 2018 tax rates, and even though the tax rates change from year to year, the process of calculating taxes remains the same. So as long as you know the rates for the year in which you're calculating income taxes, it's essentially the same 4-step process. Emily lives in Nova Scotia, and her total income for 2018 was $100,000. And she has $5,000 in allowable taxable deductions. After subtracting her allowable deductions, her taxable income is $95,000. Let's calculate her basic tax payable for her federal income tax. Canada's tax system is a progressive tax system, which means higher income gets taxed at higher rates, but everyone gets to enjoy the lowest tax bracket on the first few dollars they make, all the way up to the next tax bracket. Emily's taxable income was $95,000, which is divided among 3 different tax brackets. Her first $46,605 is taxed at 15%. The next $46,603 is taxed at 20.5%. And her final $1,792 is taxed at 26%. So Emily's basic federal tax payable is $17,010.28. Now, to work this out by hand, I did it in reverse order. Emily's taxable income takes her into the 3rd tax bracket, so I started with $95,000 and subtracted $93,208 to determine how much of her income is taxed at 26%, and I did the same for the lower tax brackets. I get the same figure, $17,010.28. Next, we calculate Emily's basic tax payable for her provincial income tax. Her taxable income of $95,000 falls into 4 different tax brackets for Nova Scotia, but the process is the same. Her first $29,590 is taxed at the lowest rate, 8.79%, and so on. And it's just her last $2,000 of taxable income that's taxed at 17.5%. So Emily's basic provincial tax payable is $13,012.45. Again, working this out by hand, I did it in reverse order, starting with $95,000 and subtracting $93,000 to determine Emily's top bracket first, and then working my way back, I got the same result, $13,012.45. So Emily's basic tax payable is the total of her federal amount and her provincial amount, which is $30,022.73. So the last step is to calculate Emily's tax credits and subtract that amount from her basic tax payable. Tax credits are calculated using the lowest federal tax rate and the lowest provincial or territorial tax rate. For example, the basic personal amount for federal income tax is $11,809. Multiply this amount by 15%, and the federal tax credit works out to be $1,771.35. For residents of Nova Scotia, the basic personal amount is $8,481. Multiply this amount by 8.79%, Nova Scotia's lowest tax rate, and the provincial tax credit is $745.48. Emily had no other tax credits to apply, so she has a total of $2,516.83 in total tax credits with which to reduce her basic tax payable. So Emily's net tax payable for 2018 is $27,505.90. And that's it. If you want to determine Emily's average tax rate, you just divide her net tax payable by her taxable income, which is 28.95%. And her marginal tax rate is 43.5%, which is her top federal tax bracket, 26%, plus her top provincial tax bracket, 17.5%.